Investing, your key to a brighter future. Investing is important. It's not just about putting money aside, it's about making your money work for you. By investing wisely, you can create a safety net for yourself and your loved ones. It helps you grow your money. Just like a plant needs water and sunlight to grow, your investments need time and the right strategy to flourish. Over time, your money can multiply, giving you financial freedom. It's about more than just getting rich. It's about securing your future and achieving your life goals. Whether it's buying a home, funding your children's education, or retiring comfortably, investing can help you get there. Investing helps you plan for the future. It allows you to set long-term goals and work towards them systematically. With a well-thought-out investment plan, you can navigate life's uncertainties with confidence. In 2024, investing is more important than ever. The global economy is evolving rapidly, and staying informed about market trends can give you a competitive edge. The world is changing fast. Technological advancements and global events can impact your investments. Staying updated and adapting to these changes is crucial for financial success. Investing can help you stay on top of things. By regularly monitoring your investments and making informed decisions, you can capitalize on opportunities and mitigate risks. It can help you reach your dreams. Whether it's purchasing your dream home, traveling the world, or starting your own business, investing can turn your aspirations into reality. Understanding how investing works is key. Educating yourself about different investment options and strategies can empower you to make better financial decisions. Once you know the basics, you can make smart choices. With the right knowledge, you can diversify your portfolio and minimize risks, ensuring steady growth. You can build a strong financial future. By investing consistently and wisely, you can create a legacy of financial stability for yourself and your family. Don't wait to start investing. Time is one of the most valuable assets when it comes to investing. The earlier you start, the more time your money has to grow. The sooner you begin, the better off you'll be. Starting early allows you to take advantage of compound interest, which can significantly boost your returns over time. Take control of your money and your future. By being proactive and making informed investment decisions, you can achieve financial independence and peace of mind. Let's learn how to invest. Join us on this journey to financial literacy and empowerment. Together, we can unlock the potential of your money and secure a brighter future. Understanding the basics: stocks, bonds, and mutual funds. Investing can seem overwhelming, but breaking it down into these fundamental categories can make it more approachable. Let's learn about some basic investments. These are essential for anyone looking to build a strong financial future. These are the building blocks of a strong portfolio. First, we have stocks. Stocks represent ownership in a company and can be a powerful way to grow your wealth over time. Stocks are like tiny pieces of big companies. When you buy stock, you own a part of that company, which means you share in its profits and losses. When you buy stock, you own a part of that company. This ownership can provide dividends, which are portions of the company's earnings paid to shareholders. Stocks can go up or down in value. The stock market can be volatile, but historically, it has provided higher returns compared to other investments. Next, we have bonds. Bonds are loans that you give to governments or companies. When you purchase a bond, You are essentially lending money to the issuer in exchange for periodic interest payments. They pay you back with interest. This interest is typically paid at regular intervals and can provide a steady income stream. Bonds are generally safer than stocks. They are considered lower risk because they provide fixed interest payments and return the principal amount at maturity. Finally, we have mutual funds. Mutual funds pool money from many investors to purchase a diversified portfolio of stocks, bonds, or other securities. Mutual funds are baskets of stocks or bonds. This diversification helps spread risk, as the performance of one security can be offset by another. They allow you to invest in many things at once. This can be particularly beneficial for new investors who may not have the time or expertise to manage individual investments. These are just a few basic investment types. Each has its own set of risks and rewards, and it's important to understand these before making any investment decisions. There are many others out there. From real estate to commodities, the investment world is vast and varied. It's important to learn about different investments before you start. Educating yourself can help you make informed decisions and build a portfolio that aligns with your financial goals. Balancing act: risk and return in investing. In investing, there's always risk and return. Risk means the chance of losing money. Return means the chance of making money. High risk usually means high return. Low risk usually means low return. You need to find a balance that works for you. Diversification is key to managing risk. Don't put all your eggs in one basket. Spread your money across different investments. Remember, investing is a marathon, not a sprint. Be patient and stay focused on your goals. Over time, you can achieve financial success. Exploring your options: equities, bonds, and real estate. In today's dynamic financial landscape, understanding your investment options is crucial. Let's explore different investment options for 2024. With the right strategy, you can make informed decisions that align with your financial goals. Each one has pros and cons. Equities are stocks. They represent ownership in a company and can be a powerful tool for wealth creation. They offer higher potential returns, but come with higher risk. The stock market can be volatile and prices can fluctuate significantly. They are good for long-term growth. Investing in equities requires patience and a willingness to ride out market ups and downs. Bonds are loans to governments or companies. When you buy a bond, you are essentially lending money to the issuer in exchange for periodic interest payments. They offer lower returns but are generally safer. Bonds are considered a more stable investment compared to stocks. They are good for income and stability. Bonds can provide a steady stream of income, making them ideal for conservative investors. Real estate involves buying and selling property. This can include residential homes, commercial buildings, or land. It can be profitable but requires a lot of money upfront. Real estate investments can yield significant returns, but they also come with high initial costs and ongoing maintenance expenses. The best investment for you depends on your goals and risk tolerance. It's important to assess your financial situation and consult with a financial advisor if needed. Do your research and choose wisely. Understanding the nuances of each investment type can help you build a diversified portfolio that meets your needs. Setting your sights: the power of investment goals. Investment goals give you direction. They help you stay focused and motivated. What do you want to achieve with your money? Short-term goals are things you want to achieve soon. This could be saving for a down payment or a vacation. Long-term goals take more time. This could be retiring early or buying a dream home. Write down your goals and how much you need to save. This will help you stay on track and make smart investment choices. Your roadmap to success. Creating a personalized investment plan. A personalized investment plan is your roadmap to success. It outlines how you'll reach your goals. First, create a budget. Track your income and expenses. See how much you can save each month. Next, set up automatic contributions to your investment accounts. This makes investing a habit. Finally, review your plan regularly. Make adjustments as needed based on your goals and life changes. Remember, investing is a journey. Your plan should evolve with you. Stay flexible and adapt to new situations. Choosing the right partner. Finding the perfect investment platform. An investment platform is where you buy and sell investments. It's important to choose the right one. Consider fees. Some platforms charge more than others. Lower fees mean more money in your pocket. Look for features that matter to you. Do you want research tools, educational resources, customer support? User experience is also important. Choose a platform that's easy to use and understand. Take your time and compare different platforms. Read reviews from other investors. Find the one that fits your needs. Staying ahead of the curve. Monitoring and adjusting your investments. Once you've invested, your work isn't done. It's important to monitor your investments. Stay informed about market trends. Read financial news and talk to financial advisors. Rebalance your portfolio periodically. This means selling some investments and buying others. It helps you stay diversified. Don't panic if the market goes down. Stay calm and stick to your plan. Remember, investing is a long-term game. By monitoring and adjusting your investments, you can stay on track to reach your financial goals. Your journey starts today. Taking the first step towards financial freedom. Investing is a journey, not a destination. It's about taking control of your money and your future. Remember the basics: stocks, bonds, mutual funds, risk and return. Diversify your investments and create a personalized plan. Choose the right investment platform and monitor your investments regularly. Stay informed and adapt to market changes. Don't wait to start investing. The sooner you begin, the better. Take that first step today and start building your brighter future. Join the community. Let's grow together. Investing can feel overwhelming, but you're not alone. Subscribe for more content on investing and personal finance, and check on the links below for more insights on investing. Let's grow our wealth together. Share your thoughts, questions, and experiences in the comments below. Let's start a conversation about building a better financial future. Remember, we're all on this journey together.